whiskey.
It's live. Hi, everybody. This is Hyperwave. I'm here with Tyler. Yes, it is Sunday, so thank you for joining us. We are going live today to talk about the fork in the road and prudent money management. Now, at the end of the day, Tyler has managed billions of dollars, and one of our actually best, most appreciative blogs, that was done over a year ago was on retirement accounts and money management and how to plan for your retirement accounts. So that got in our brain with how crazy the markets have been, and we've been covering that. And Tyler this morning, like the wild man he is, calls me and says that Sunday today we need to talk about money management in this crazy time. Now, that I think is actually a very, very important show today. And I am actually going to be asking loads of questions myself. So you guys probably even have better questions than me, but I will just be totally honest on how confused I am. Good thing that Tyler is my money manager. But I want to learn as much as possible as well. So I think that this will be a powerful and important one. And that's all she wrote on my side. Tyler.
Great. Well, thanks, Leah, and thank everybody for listening. Sorry about the cat reference. I love cats. We've had cats our whole life. Obviously, I meant fireside chat, and that's what this is. We're just going to talk. I don't want to oversell this, but I think this is the most important vlog we've done. We've done about 140 vlogs, and I think a number of them were very, very important. Those where we're teaching different things that most people haven't been exposed to, like Hyperwave or Consensio or Selgin or stop and reverse points. Just these technical little fun things. But the most important from a lifestyle point of view was the one on money management. People throw those terms around all the time, and you can go back and listen to previous logs. I think there's one called Money Management. We do have a webinar out on money management, but those are all academic and theoretical from a guy that's spent 40 years trying to figure it all out, and then having my feet held to the fire in very difficult markets with an awful lot of money under management, where a lot of people are taking a look at everything you are doing, and it's being compared to indexes and other money managers and all of the rest of it. And so this is going to be pretty short, very pithy, but I need to make some very important points in terms of where we are historically right now, today, this weekend. We've had some important things to say over the last 14 or 15 months, but none of the things we talked about had come to a fork in the road as the one we face today, this afternoon on the East Coast and around the world tomorrow morning as markets open up. The reason I'm building this all up is because of the discussion that many of you are having about hyperwaves, and many of you are having about our Medium articles that are trying to highlight a very high level problem that is beginning to affect markets around the world, and therefore assets around the world, and therefore your well-being and your assets. If you've just started collecting assets, if you've been doing it for 70 years, if you have retirement accounts or don't have retirement accounts, this is not going to be trading, what to buy, what to sell today. We've done that before in the past. As you know, I'm a very long-term investor. I just wanted to hold this up for a second. That is a loaf of sourdough bread that my lovely wife, Lisa, some of you met her, many of you met her
She just taught me how to cook it.
in Las
bake
Vegas,
it.
yes. And she's been teaching Leah. This one came out perfect. It's taken 2 months. Literally, she's been working 10 hours a day, all night, trying to get this stupid loaf of bread. It's the hardest thing in the world to make sourdough bread. So after this, if any of you want to take on, it's worth it, believe me. It's the best stuff you've ever tasted in the world, but it is almost like learning Hyperwave or Consensio and other technical systems like the sequential. It is so complicated, you won't believe it. There's all kinds of YouTube videos on it. Okay, here's the dealio. The stock market is now at a point where it's been going up and the economy is going up basically longer than any time in US history. Give or take a couple of weeks and a couple of quarters on the economy, but that we have to make a decision here. The markets have to make a decision. And the decision is, are we going to continue up or are we turning down? And I'm not going to give you an answer because I do not know. Because of that, I'm got one foot on one side of the fence and the other foot on the other side of the fence, and it's very uncomfortable. But we are going to get evidence very, very quickly about what is about to happen. So let's step back and talk about the difference between speculating on, is XRP going up, is Bitcoin going down, who's going to win the bet in the crypto. None of that matters. That is pennies and nickels compared to what the world faces right now with all of the trillions and trillions and trillions of dollars that are sitting in things other than cash. As you know, Leah and I are very big believers in Bitcoin being a possible solution to this huge debt credit problem, but not today. It's not on anyone's radar screen except some of our listeners and some of the people in the crypto market. And it's unfortunate that an awful lot of people in the crypto market, that's the only thing they think about. What we're talking about today is much, much broader, much bigger, and will impact Bitcoin and crypto, and will impact the price of gold, and will impact retirement accounts, possibly more so than any other time in US history, in developed country history, and in civilized history. Wow, what a way to start. But I really believe it. Let's just do a very quick review. The stock market has not gone anywhere in almost 15 months. Going up 10% and down 10% and ending right where you started is not doing anything. If you were just randomly buying or selling stocks or mutual funds or ETFs, you were right half the time and wrong half the time. If you were buying and you got caught in a downswing, you lost on those trades. If you were buying and got caught in an updraft, you made money on those. Fundamental analysis didn't matter. Technical analysis didn't matter. The market was not going anywhere for a very long period of time. And that is true with markets all over the world. The only exception I can see is China, that went way, way, way down and now has been the strongest market in the world in the last 3 months or so. It still has a long way to go just to get back up to where it was, but that is significant. That was a bear market followed by what looks like a bull market or a mini bull market catching up with the US and other things. But European markets did not do that. Asian markets in general did not do that. Emerging markets in general did not do that. Basically, we had come to a fork in the road in which either everybody's going to go up together for a while or everybody's about to go down. And the reason I wanted to have this talk today is that's true in every asset class. Forget stocks. That's true in the bond market, which had an 80-year run, 40 years up and 40 years down in yields, which means 40 years up in the yield of all bonds, not just US bonds, government bonds all over the world, corporate bonds all over the world, municipal bonds all over the world, between 1940 and 1979. And then we had a 40-year bull market in which interest rates fell for 40 years and bond prices went up for 40 years. That came to an end 3.5 years ago. So one huge asset class, which is bigger than the stock market, the bond market is bigger than the stock market. That asset class has just finished an enormous bear market that lasted 4 decades, over a generation, and then an enormous bull market that lasted 4 decades, over a generation, in some cases 2 generations. And now it's at a crossroads. It's either going to start another bull market or go into a deep bear market. The precious metal market is doing exactly the same thing. It had an enormous bull market in the 70s, an enormous bear market from 1980 until the beginning of 2000, around 2002, 2003, 2004, and then had a tremendous bull market again from $265 an ounce on gold up to $1,940. But that ended 5 years ago. And since then, it's been caught in a very narrow range between $1,380 at the top and $1,100 at the bottom. Same thing with silver. Same thing with platinum. Believe it or not, the only thing that's a little askew is palladium, and everyone in the world is trying to figure out why. And there's not enough money to be made or lost in that, so I'm not suggesting you spend any time doing that. I'm not talking about narrow individual ways of making or losing money quickly. We're talking a much bigger theme here. The theme, which we talked about in our money management vlogs and in our webinar, is there's only 2 or 3 ways to start with nothing and end with something, and that something is in the form of wealth. It's true you can inherit it, but for the vast majority of people, that's not a possibility. The other way is you can go to work and spend your wealth in the form of education, time, and effort, converting those things from your personal time away from everything else, your school, your family, your hopes and objectives. You get into this thing that many people call a rut, because originally you needed the job, you took the job, it wasn't the real job you wanted, it wasn't even in the real area you thought you were interested in, but you've stuck with it, and you were able to make some wealth from that. And you either did that by putting it in a retirement account or being very careful about whatever you were taking in, you didn't spend it all. And that's really hard, particularly for young people. Once you get something, you want to spend it. And after you've done that for a year or 2 years or 5 years or 10 years or 20 years, there's something left or there's not very much left. That's what we're talking about today. We're talking about once you have done that and accumulated something, you can either speculate and gamble with that or you can invest it. And what we have been teaching for the last year and a half is it's okay to speculate and gamble and try to make a lot of money on something that's hot. Could be gold mining shares, it could be crypto coins, it could be the newest tech rage, it could be the newest biotech rage. It might have something to do with the genome. There are all kinds of cutting edge things. It might be something like Tesla. That's all great. And I love that sort of stuff. That's what got Leah and I into the crypto area and particularly into Bitcoin because of the potential of not only understanding it and what it could do, but also figuring out a way to invest in it. Not just jump in and out every time somebody thinks it's going up $2,000 or down 2,000. I don't care. You know that. I've been saying that for months. I'm not interested in the crypto market right now. It's too tiny. 95% of all of my clients have never gotten into it, are not interested in it. What they're doing is they're trying to manage their life's work. And that's been my background for 40 years, is figuring out the best way of doing that. So in a very short period of time, what I'm trying to get across to you is I will repeat some of the things that we said in the earlier vlogs and in the webinar that sound trite. I know that. And we've made sweatshirts out of most of these trite sayings. But you cannot underestimate how true they are and how powerful they are. And you must understand in the period we're about to go into what these principles are there for. So number one, the trend is your friend. And I'm talking about long-term trends that are going to last at least a year and probably 3 years and hopefully like this last one, 10 years. Because if that is the case, and that can be the case in both directions, up or down, I'm not talking about which way the trend is going. I'm saying you've got to learn to recognize what the trend is. And the easiest way is with this hierarchy that I keep talking about. Number one is the world economy. Number two is the economy of the country that you are living in. Number three is the reaction of the stock and the bond market to the economy of the country you are living in. Number four are the sectors and the industries that make up that stock market in that economy, in that country you're living in, that is part of the world economy. If you don't have a clear picture of that hierarchy, then your tendency is to take a shortcut. And the shortcut is, ooh, this thing was up over the last 3 years, 450%. I'm going to put a lot of my money on it because I read these 3 reports and a friend told me this, and I heard 3 guys on YouTube say this about it. Therefore, I'm going for it. I'm tired after 10 years or 15 years or 20 years of grinding out a living. Here is my opportunity. That is the worst thing you can ever do, regardless if it works out okay. Because I assure you the next time it won't, or the time after that. So what money management does is it says, I have worked and I have $10,000 that I've accumulated that I can do something with. And I don't want it sitting at a bank at no interest. Or 50,000 or 100,000 or 1,000,000. Or like many of the clients that I've had, 10 million or 20 million or 50 million or 100 million. The biggest clients that I've managed money for ranged between 100 million and 400 million dollars, all under the auspices of the group that I was with, managing all of that money, all of their money. And that is not only a huge responsibility for the people with the money, but it's an enormous responsibility on people like myself and the teams that I worked with. Because it means it does not matter that this thing over here went up 400%. That doesn't even enter into the discussion. What needs to enter into your outlook is, I will put 60%, 60% of my hard-earned money into things that move with the overall world economy, my nation's economy, my nation's stock market, and I want to duplicate what those things are doing with 60% of my money. So if you've got $10,000, 6,000 should always be indexed to those things. If the trend is up, if the trend is down, that 60% should be in cash, not in something else that looks interesting, in cash. 25% of your 10,000 or 100,000 or 10 million should be in sectors and industries which will move much more volatilely than that big thing called the economy or the overall stock market. You can do 2 or 3 times better or 2 or 3 times worse, but you're only doing it with 25% of $10,000 or $100,000 or $1 million. And you're only going to put money in those sectors or industries when their trends are up. You are going to be in cash when those trends are down. And then the last piece is 15%. No more than 15% on individual stocks, things like cryptocurrency or mining shares that are very, very volatile, where you can do 10x very easily, or you can lose 90% of it also very easily, even with money management, simply because of the way they move relative to sectors and industries, which are made up of hundreds and hundreds of securities, or overall indexes in your 60%, which are made up of thousands and sometimes many, many thousands of securities. That portfolio of 60, 25, and 15 puts you in a position that you can consistently make money in both up and down markets. After you've determined what the trend is, if you don't have a technique of saying this trend is up and it will continue up until I get a signal that it's no longer up, then you're just guessing. And that worked very well for 75 years. And it does not work very well any longer. Okay. So those are the first 2 important principles. think of the money that you've got sitting in checking or savings. Where did it come from? How many hours? How many years of school? How many years at this particular place have you spent 8, 10, 12 hours a day doing all kinds of things to convert your time, your energy, your education, and your experience into this thing called cash or wealth? What you've just done is you've transferred. You've transferred at high level schools at $40,000 or $50,000 a year, $160,000 to $200,000 of your time. Probably borrowed it from your parents. If you did it yourself, good for you. If you took out a loan, good for you. Unfortunately, you've got to pay it back, so you don't want to mess with it. But my point is, that was a transaction that you decided on. You could have dropped out of high school. You could have worked hard in an industry and made a lot of money. You didn't. You made the choice that you were going to try to become educated so that regardless of what came your way, politically, economically, financially, socially, with other people that you wanted to be with, you made the decision that you wanted to take that next step. And then you spent 3 years or 4 years, or if you went to graduate school, another 3 years if you got higher degrees, and that cost a bloody fortune. And what you've got for it is in your head. It's not in a checking account. It's not in a savings account. And now you take the next step in your life. You start a family with everything that's involved with that, in terms of what you're going to have to give up, what the other person is going to have to give up. Those are transactions. If you had stayed on your own and you had simply worked and turned it into cash, then you would be in a very different place today than making the decision to go off and do this next thing. And you are not using your education for that. What you're doing is you're watering down your education, because if you're both working until you can't because you need either childcare or one of you has to stay at home and therefore you're not bringing in income, it's a very important decision. Just as all the other decisions that are going to take place as you get older and older and have to make decisions about what about this, what about that. That is all part of money management. And you need not to look at money management flippantly, because it is everything. It will take care of wherever you are, whatever you're doing, how much you've been able to accumulate. And if you ignore it, if you make assumptions that I'm just going to try this thing out, or I'm just going to do this, or I know, sequential tells me when a 9 hits, I've got a 75 or maybe even larger percentage. That's huge. I'm going to put 50% of my money and I'm going to leverage it using options or futures because this is going to work out. That should be done with 15% of your money. Now, Leah and I have a number of consulting clients. And in consulting, we don't dictate anything. I give suggestions. People give me what they're thinking about doing. I'll be as straightforward as I can on it. And if I don't agree with it, I'll say I won't agree with it. But many of them do it anyway. Because, they've known me for a short period of time. They've heard some of the things I've done, but they know themselves very well. We all think that we can filter out all this information and say false, false, true, true, false, false, false. This guy's an idiot. This guy's a genius. And in actuality, we can't do that. You have to only know one person, that's yourself. And it takes a long time to sort through the ability to get all this disparate information that comes into you and then overcome your own emotional biases or other biases that you have and do the right thing. So, why am I going on about all that? You've heard us talk about the stock market from the S&P point of view here in the United States, trading between 2,600 and 2,800 or 2,850. And I have said over and over again that I believe if we can get above 2,850 or so, 2,800 to 2,850, that we have a very strong possibility of moving higher and going to new highs. And if we go to new highs above the ones from last September, that probably means the trend is intact to the upside. When that occurs, I will be 100% invested in that 60% for all of my clients. I will probably be 100% invested for the 25% for all of my clients. And I will probably have that 15% completely invested for all of my clients. That's one side of the coin. The other side of the coin is that we have run into huge resistance politically, economically, through trade, domestically and internationally, with tremendous resistance to what the US has been trying to do for the last 2 years. And it's too early to tell what's going to happen. I think it's 50-50. And what I mean by that is if we keep going down the way we have for the last week or 7 or 8 days, and almost all technical systems are signaling that weakness right now, after signaling a lot of strength since the second week in December, then this could turn into a rout very, very quickly. Because it's not me, it's not I or me alone thinking these things. It's all hedge funds, all financial planners, all investment managers, all mutual fund managers, all strategists, all chief investment officers, all around the world. All you've got to do is turn on CNBC. I know for a lot of you that's difficult to do. It's difficult for me to do. There's so much jabbering. And what happens is they get one or two people on that says, here's why it's going way up, and then one or two people on that say, here's why it's going way down. And they're very, very smart people. But out of 1,000 of them, 500 think it's going up and 500 think it's going down. So don't think that Tyler Jenks or you have the answer. You have to rely on something that gives you evidence and timing. And that's what Consensio does. That's what sequential does. That's what Elliott wave does. That's what fundamental analysis does. That's what economic analysis does. And all I'm telling you that we are at a crossroads right now, right here, where gold can't get above 1380, because if it does, it's going to go probably to 1900. Silver can't get above about $17.50, because if it does, it's probably going back to $40. But if they can't, now gold and silver started to slip again, fell back below 1300. Silver got down below $15. If they go too much further, gold could easily get down to $600, and silver could easily get down to $6 or $7 an ounce again. Well, that is not the kind of a position that you want to be putting any of your 60% in, maybe a little of your 25%, and you might be playing around with that little piece over on the other side. But what I'm saying is, from my perspective as a money manager, we are very, very close to going one way or the other. What happens, and I'm going to just throw Bitcoin out for a second, when you get to indecision points, and I'm saying we've got indecision points with interest rates, with the dollar, with other currencies, with precious metals, with stock markets around the world, and with bond markets and interest rates around the world. We are at an indecision point right now. And one or two of them might break one way. And if it pulls others in that direction, there'll be a stampede. But at the same time, one or two of them might break to the downside. And if they do, in a short period of time, there will be a stampede in the direction of that break to the downside. So this is the time to be ultra cautious, but not just about where the money is. You should not be having big positions in anything right now. But I wanted to have this talk so you are thinking in terms of these bigger pictures. You either believe or don't believe the world debt problem. If you came to us through the crypto market, you probably do. Many of you haven't taken the time to understand the macroeconomic implications of what Satoshi Nakamoto's simple white paper was about. It wasn't just about coding, and it wasn't just about a new way of doing things to replace fiat money. It was about those things, but not only about it. It was because of the clarity which with a number of people now in the crypto space have about the big problem that Leah and I have been talking about and what the solutions are. And some of you on Twitter have been, and I thank you for listing those 5 solutions. One is Bitcoin, one is a gold standard, one is default, one is growing out of the problem, one's a basket, kind of the Chinese basket, including gold and the yuan and the dollar and other currencies, and maybe even Bitcoin. Just as an aside, very quickly, I have not done my gold article, and I'm not going to until I finish another article, which I think I believe now, after looking at it for the last month, that it is the best solution to the problem. And I didn't even identify this. Some of you did and sent questions into Leah and me, and we've talked about it and thought about it. And I think you're right, those that identified this. I think the right solution to the world debt problem is a gold Bitcoin standard. And that's what I've been working on. And just, without pulling the curtains too far apart until I've got time to finish it up, and I'm trying desperately. If Bitcoin can get to $5 million an ounce and gold is pegged at $15,000 an ounce, it solves the same problem in the same way, but in a much better way for most people around the world, without so much collateral damage that we would have if it's only Bitcoin or only gold. And there are things in the work right now that make it apparent that powers that be are seriously considering some type of a gold standard. No one has seriously considered some kind of a Bitcoin standard except theoreticians and people like me that have far too much time on our hands. But the reason I bring that up is it is recognized by everyone who's in a position to have to know what the problem is. Everyone in the financial world, everyone in the banking world, everyone in the financial political world, everyone at the IMF, everybody at the World Bank. The World Bank and the IMF have, according to Jim Rickards, and I'm not going to spend a lot of time on this, but made some changes in how countries are able to vote. And I have not backed this up, and I'm trying to for this article, but within the next 30 days, according to Rickards, there's going to be a change in the voting at the IMF. And basically, there's only one country that has veto power, and that's the US. It's not stated that it's the US. It has to do with the size of the economies. If an economy is greater than 50%, 15% of the world total, that country or countries have veto power over anything that goes on there. There's only been one for the last 50 years. That's the US. That's about to change in the next 30 days. What's going to change is a block of countries called the BRIC countries are going to be able to be counted as one entity. That means Russia and China and South Africa and India and one other that I'm missing will be able to vote as a block, and it is greater than 15%, which means if a resolution passes about sending money to some country and there's a vote taken and the US vetoes it, this new block can veto the veto, or the other way around. Now we're going to have to do a lot of work on that, and I don't want to get into a discussion about Rickards. I followed him for 20 years, and his timing is very rarely on target. But that doesn't mean he doesn't have a wealth of information. Now, that's one little tiny piece of what I'm talking about the world debt problem and what the solution is going to be. There are many other gears working right now that are trying all kinds of things to come up with ways of taking care of this enormous problem. And so far, it has not seriously affected markets around the world. My message to you is, please go back and look at our money management vlogs. If you don't mind spending $150, please listen to our webinar on money management, because I'm going to, along with Leah, over again, the portfolios. We're going to be talking over and over again, starting today with this brief, whatever this is, diatribe on one side, or maybe it's you take this as more important than that. I hope you do, because I believe, with my experience through all kinds of bull and bear markets, through all kinds of asset classes, that where we sit here this weekend is the most critical point in my entire experience. And we will do everything we can to pass on information as we get it. And that's what I wanted to talk about today. We're not even going to talk about Bitcoin, which hasn't done anything, and I don't believe is going to for many weeks or months. But it will be affected, maybe very positively, maybe very negatively. Gold and silver will be very positively or very negatively affected. Commodity prices, real estate prices, unemployment rates, GDP growth, prices in general, wages specifically, all are sitting on the edge, teetering back and forth. And this is the time to be hyper vigilant. And with that, thank you for listening. And I want to bring my partner into this, who's been following all of this along with me for the last year and a half and helping to design what we actually say at a point in time. But I caught her a little bit off guard by saying, I think this is when we've got to talk about it.
I was hiking in the woods, but I think that, well, to continue paying for Thor's very expensive kibble, that it was the right timing. I think that this is brilliant. I mean, it's actually, you know, why we started these things. And maybe, Tyler, I'll end this on, do you want to give people a little teaser on a couple of these upcoming webinars? One, I'll give the teaser and then Tyler will explain. The Hyperwave Part 2 is actually very specific on how to trade hyperwaves, active hyperwaves, but not just investing, but trading. Two, Tyler, if I'm allowed to say out loud, that we're going to do potentially a webinar on how Tyler actually traded GBTC and what stop losses you put, why, and just also the minutia of, from a money management perspective, but how actually to identify and retrospectively, and also just explain with exact examples with timestamps that how it was done, everything. I'll stop talking, but Ty, you want to?
That's exactly right. We've got a lot on the drawing board, and Socrates and Leah and I have been working on this book that will, our target is for a book on Hyperwave in huge detail coming out by the end of the year. We'll see what happens, and that all depends on everything we're talking about today. If you know what hits the fan, we're all going to be up to our eyeballs just getting through it all. And so we'll see. But we do have a webinar coming up, which is part 2 of a Hyperwave webinar. Now, but Leah's correct. It's not all the stuff about hyperwaves. You've got to go back to the vlogs, our earlier webinars and other things to get up to speed on that. It's basically how to actually trade them, both short, intermediate, and long term, for speculators as well as for long-term investors. So that's coming up. It's on our website right now. What I wanted to do in the last webinar we did is I wanted the people attending both in Vegas and on our webinar to come away with one idea. That is, okay, I am now convinced these things are real. But that's only step 1. Once you've seen the evidence, then mentally you've got a picture that, okay, there is a thing out there that other people have never talked about, that it does things that give me a lot of confidence. So now what this part 2 is going to be is Socrates and I will basically, with Leah, be doing a 8-hour fireside chat where we go over techniques, over not 100 charts or even 50 charts or probably 20 charts. We're going to pick apart all of the ones that so many people are interested in, the Amazons, the Googles, the Netflix, the Activision Blizzards, things that are in, just as everything I've said about markets, the same thing is true about all of these things. Are they in phase 3s or 4s? Have they already gone into 5s? Is there some that are sitting on funky hyperwave lines, and what to do about it? So that's the first part of what Leah was pointing out. The second, and that's 2 weeks from this weekend. The second thing is I am going to go back. I've already done a vlog with Leah where we showed what techniques were used in 2001 and 2 and 3 to get out of that market as best we could, where institutions would not allow us to raise cash. And we are going to do another webinar. It will be a general one, so it'll probably be a $150 webinar like the other ones, just a 4-hour webinar where we are going to look at three things. One is what I personally did in the decision-making process back in early 2000 to protect institutional client assets, along with what we bought, what we sold, when we did it, why we did it. Then we're going to do the same thing in 2007, where we were able to protect all of our individual client assets by getting them completely out of the market before the downturn. What did we sell? When did we sell? Why did we sell it? And then we will have a third part that will all be part of this same webinar, which is exactly where, when, and why did I put money into GBTC, on what days, in what amounts, with what stops, and exactly where, why, and how we got out of it, so that that entire hyperwave trade was made up of 2 trades. Those 2 trades were buying as it went up and selling at the top and staying out for the last 14 months. Now, those trades are not all put in on the same day. I built the position on the upside as we went at various positions in the hyperwave chain. I sold it all at one time with one ticket when the 4th phase of the hyperwaves was broken. And we'll identify all of those in those 3 examples, because those are real time me using hyperwave to make very big decisions. In one case with several billions of dollars, with many, many large clients, institutional clients, and 3,000 other clients that were individual clients. And with the last one, Bitcoin, since I've been retired, we just did it with friends and family and a small number of clients. So we'll go into all of that. So thank you for bringing that up, Leah. It's very difficult not to sound like you're shilling stuff, particularly on YouTube and particularly in this crypto space. Leah and I try to bring as much as we can to you that has nothing to do with anything other than teaching you. And when enough of you say, I would like a lot more on this particular subject, we move to the webinar. When a lot of people said, this hyperwave thing is really interesting, can you teach it to us? We took the next step, and that's what we're doing. And that you don't need to do it. You can learn by listening to these vlogs. But if you'd like to, we're making that available to as many people that want to do it. Okay.
So everybody, thank you so much. This, as Tyler said, will not be the last time. We are definitely going to be incorporating more of specifically money management, so that yes, Bitcoin, traditional markets, what are we seeing? What is Tyler thinking? What is Tyler selling? What is he buying? More in depth through our webinars now, specifically as people, a lot of people are in doubt of, our statements, to be able to see them exactly and what you did and why, and start learning from that. But really incorporating more, what Tyler knows probably more than anyone else in the world, of how to be a brilliant money manager, so that everybody here that's listening can just make sure that you guys are safe, make sure that everybody's growing their money, make sure that everybody's children are taken care of, that, we're here to educate, but to help and provide resources, which is why Tyler always makes my inbox a nightmare in the morning by telling everybody that they can ask as many questions as they want by sending them directly to my email address. And yes, actually, I do like and appreciate your emails. Both of us do. So with that said, yes, our webinar is coming up. Yes, Shill. Okay. In 2 weeks, everything's on the website. All the past webinars are on the website. Someone was asking, I'll just say one more thing, Ty, about taxes and how to deal with that. That is definitely something we're going to talk about. So I think we're also taking these to be, definitely Bitcoin, crypto, traditional markets, but especially moving to more practical advice, proactive, retroactive, and, you know, running the gamut, but listening to everything that you guys are asking us for. So hopefully that you get a lot of value out of it. So with that, everybody have a great Sunday. And Ty, any last things?
No, thank you all very much for taking up your Sunday to listen to us. And for those of you that don't, you can go back to the YouTube and pick it up. Thank you very much. Thanks, Leah.
All right. Ciao, everybody.
Bye-bye.